auditorium, the Vice Chancellor's procession. On the Vice Chancellor's procession, we have in the order in which they are coming in, directors of institutes, directors of academic programs and units, deans of faculties, the dean of students, the dean postgraduate studies, the inaugural lecturer and principal officers of our great university, the Vice Chancellor's procession.
Even part-time accounting students selfless and unbiased contribution award. Professor OMOYE has successfully supervised over 34 master's and 16 PhD theses. He has over 60 publications comprising chapters in books and articles in peer-reviewed journals. He was the editor-in-chief, University of Benin Journal of Accounting from 1918 to 2021. He has served as external examiner, assessor, resource person to several universities, and he has been a member of accreditation teams of the National Universities Commission and the Institute of Chartered Accountants. He has attended several local, national, and international symposia, workshops, and conferences. Professor OMOYE's hobbies include current affairs, reading, evangelism, and community development. He is a Christian of the Redeemed Christian Church of God. He is married to Mrs. Efosa OMOYE, and the union is blessed with 4 lovely children. Distinguished ladies and gentlemen, it is my pleasure to invite Professor ALADE SULE OMOYE to deliver his inaugural lecture.
Madam Vice Chancellor, and my highly esteemed distinguished audience, permit me to align myself with the protocol already well established by University PRO as I deliver this inaugural lecture. I'm profoundly thankful to the Almighty God for the grace and privilege bestowed upon me to deliver the 326th lecture in the inaugural lecture series of the prestigious University of Benin. Madam Vice Chancellor, this lecture is the 15th contribution for the Faculty of Management Sciences and the 10th for the Department of Accounting. It is with deep humility and sense of responsibility that I stand before you today, honored to be part of this academic legacy and to share my thoughts on this remarkable occasion. I humbly follow in the footsteps of my distinguished professors, Professors Emeritus A.R. Anao in 1991, Professor Izedome in 2015, Professor Isemila in 2017, Professor Okafor in 2018, Professor Oladipupo in 2023, Professor Ayaduba in 2023, Professor O.J. Ilaboya in 2024, Professor Ubame in 2024, and of course the recent one, Professor A. Enofe, who delivered his own inaugural lecture on August 1st in 2024. At this point, Madam Vice Chancellor, I must accept that as a seasoned professional in the field of accounting and taxation, my specialization lies predominantly in financial and corporate reporting. My primary concern has always been to ensure that financial reports are of the highest quality, providing accurate and reliable information that empowers various users to make sound and informed decisions. It is with deep and profound gratitude that I warmly acknowledge that I warmly acknowledge and I appreciate Madam Vice Chancellor for bestowing upon me the distinguished honor of delivering this inaugural lecture titled Bankruptcy and Corporate Failure, Averting the Dreaded Evil Twins. I'm really privileged to share my knowledge on such a critical issue before this august audience. The inability of a debtor to repay mature debt, that is debt obligations, in a manner is a matter of insolvency. This culminates in bankruptcy or corporate failure, which we can even refer to as distress. Going forward, therefore, it is appropriate to say that the nexus and common denominator between bankruptcy and corporate failure is insolvency. Suffices to quickly point out that operating a business for optimal desired result involves a lot of planning, deployment of resources, both financial and human, directing, evaluating, processing, and procedures, coordination, and making the right decision. Bankruptcy and corporate failure, described as two sides of the same coin, are deeply intertwined, yet distinct in their applications. The analogy of dreaded evil twins applied aptly capture the pervasive fear and uncertainty that these phenomena evoke in both private and the business, forming a symbiotic relationship that can have far-reaching consequences for businesses, its stakeholders, and the broader economy. The global economy is currently witnessing a serious economic stability more than ever. This is marked by individual and corporate distresses, with more pressure on developing countries, especially Nigeria, where homes are being wrecked, businesses and economic stability being undermined. Therefore, this lecture couldn't have been more apt than now. Hence, the exploration delves into the complicated relationship between bankruptcy and corporate failure, drawing upon existing studies to illuminate their impacts and interconnection. Now, what are we really saying here? The title we have before us is Bankruptcy and Corporate Failure, Averting the Dreaded Evil Twins. There are two words here mainly, bankruptcy and corporate failure. Just to break it down so that everybody will understand. When you refer to bankruptcy, in fact, both of them, either bankruptcy or corporate failure, is talking about issue of indebtedness. That is to be a debtor. There's nothing wrong to be a debtor. But what is wrong is when you are not able to pay now. That is when the debt is due, you are not able to pay. And become worse still, that you are not able to pay when the debt is mature for payment, but the possibility of you being able to pay it in the future is what? May not even be there, or it's scanty, or it's doubtful. That is all about what we are discussing here. Now, the issue of bankruptcy relates to individuals or entity without limited liability that don't have limited liability status, like one-man business, how you call it. That is sole entrepreneurship or proprietorship, or partnership business that don't enjoy the status of what limited liability. All right, that is for bankruptcy individuals, just as self and yourself. Okay. Now, when I talk about corporate failure or by extension liquidation, we are talking about businesses now that are incorporated, that is, that are limited, that has limited liability status. If you like, call it big company or bigger companies. So, further, we have said the same thing but in two different ways. All right? Why in some countries, in developed countries like America and UK, there's no distinction. The issue is bankruptcy applies to all. But in Nigeria, they are separated. Bankruptcy deals with individuals, while corporate failure deals with what? Entities with limited liability status. Have we got it out, sorted out? What bankruptcy is typically referred to as the legal status of an individual or entity that cannot repay their outstanding debt, leading to a formal process where court may oversee the resolution of the debtor's financial obligation, often through the receiver and a trustee in bankruptcy. So if it happens that as an individual you are owing, you cannot pay, but you don't have to take laws in your hand. The creditor shouldn't take laws in your hands. So they have to approach the court. There's a process involved, which we are going to see later, what we call bankruptcy proceedings. You have to be suited. The lawyers, they know what I'm talking about. Okay? So you have to maintain cordiality in the community and in the environment, so that people will not pay losses. There could be some strong debtor, and you can even have some strong creditors. Whether you are strong or you are weak, the law is there to protect you, provided for a legal process. Okay? Now, corporate failure, on the other hand, signifies the cessation of a business due to financial mismanagement, poor strategy, and operational inefficiency. These factors have been shown to contribute to companies' inability to continue as well a going concern. For those in finance or accounting, what we talk about going concern is this belief that the business you are operating or will continue in existence. It's not going to, there is no idea when the business is going to stop to operate. With that mindset, you are free to do business without business, that company, that entity, because it's going to continue. You are not going to wake up tomorrow, you are told that it's no longer there. So that's what we call going concern entity or concept. So when it's no longer applicable, which means anything can happen to the company anywhere from that time. So issue of corporate failure comes in. Now, OMOYE and OBEHI 2023, OMOYE and ODIASE 2015, and OMOYE and ALADE 2013 discovered that salient impact of corporate governance on corporate performance, which happens to be the brain boss that manages corporate failure. It is worrying to note that policymakers and regulators play a crucial role in creating a supportive business environment that fosters growth and resilience. Therefore, as a matter of emphasis, this lecture will, in no small measure, create awareness of the intricacies of bankruptcy and corporate failure, thereby fostering stakeholders' collaborations in developing effective measures to prevent these dreaded evil twins. Some technology we may not be familiar with. Like we have already explained corporate failure, what it means. You could see from the diagram, this is a case of a corporate failure. Imagine your company, you are told from the signal that the company is going to fail. So there's this fear, this apprehension that, what happened? The first, what happened to your job? What happened to your family? Your investment, that is for the people that invested in the company, and so on and so forth. It's a serious case. So, of course, for individuals, that is for bankruptcy. I hope that will come on later. So, for individuals, when you have a suspected case that an individual could be a candidate of bankruptcy, that is, there's every likelihood that individual will not be able to pay the debt, not even when it is due, but thereafter. If I want to say cannot pay now or thereafter, what we are saying is this, that even if you have to, in this field, we don't use the word sell, we use realization or dispose of the property of such individual debtor. We must still be enough to pay all his liabilities. So that is a case of bankruptcy. When that happens, the debtor has the right to seek a relief by going through bankruptcy proceeding process. When that happens, through the court and they analyze, that same debtor today, that we refer to as debtor, the court can rule when the process is completed, even when or if the asset will not be enough to take care of all what is owing, is no longer owing again. So that means, assuming you have 10,000 and what is owing is 50,000. After having taken that 10,000 for you to settle those is owing based on prescription standard, whatever is that 40,000 is no longer owing. then he's not discharged from being what? A bankrupt. He's not discharged. At that point, he's free now to go back to business or to live his normal life as an individual, not as what? A debtor or a bankrupt. Okay? Not as a bankrupt. It's like Bible saying that when you become born again, that's for the Christians, with due respect to the Muslim and the unbelievers. For the Christians, when you are born again, what happens? You become a new creation. Now the old sins are what? That's away. But again, there is a caveat. You go and sin no more. In case of bankruptcy, you are no longer owing, even when you cannot pay. But however, go back as a new person, start your business, provided anyway you can incur debt, you can be a debtor again, but you shouldn't be a debtor that cannot pay debt any longer. That is just how it works. Okay? Okay. Now, the term dreaded evil twins, if you check it out, I suggest something that is regarded with great fear and apprehension. Evil means morally reprehensible and causing discomfort. Twins signify something because of two matching or corresponding attributes. Related this affirmation definition to this lecture, the three dreaded evil twins describe unlikable situations or phenomena that are separate in terms of legal framework and methodologies, but intricately related, especially at least on one fundamental character, which is what? Insolvency. Which means insolvency is a condition where a debtor, whether individual or a company or an entity, is owing debt and the debt is due for payment and is not able to pay. And that's the situation is what we call insolvency. And it's common to both bankruptcy and what? Good. Thank you so much. Now, if that is the case, when a company is now in insolvency, what happens? Either a company or individual. That means for individual, they have to go through the bankruptcy process. For a company, they have to go through administration to see if they can manage the companies. That is what happens in some banks in Nigeria here. Some of them still continue, but some of them, could continue. All right? So that is the extreme case now. That if it's so bad, you cannot be managed. No other bank got to take you over. So you have to go down, and that process is what we call liquidation, or what we call winding up of the business. So the business stops to operate. It's no longer recognized by the Corporate Affairs Commission and other regulatory authorities. It ceases to. Now, why do you have to bring in the accountant to do the process, to go through the process? The accountant that comes in the process to prepare what we call the statement of affairs, as well as what? Deficiency or surplus account. Those statements help to profile the company, to look at the extent of debt, who is being owned and what. All right? So we put it together. And again, in all, we're able to find out whether the extent of indebtedness as well as the extent of asset. And when you strike the balance between the total asset and total liability, if it is negative, that means if the assets are more than the liability, we now have a case of initial deficiency, because there will be more cost that we added. But if that's the case, you have what's called initial surplus. All right? So that is what those one stand for. The statement of affairs as well as deficiency surplus account. Now, receivership order. This order is typically issued when a company is in financial distress, leading to the inability to pay off their debts. The receiver acts as a neutral party to oversee the asset and work towards getting the recovery value, restructuring the entities or liquidating the asset. Now, however, like I said, this process has to be guided. So that brings us to a regulatory framework. For the bankruptcy, we have what we call the Bankruptcy Act that was enacted in 1979. After going through a lot of amendments, 1991, and then we have one of 2004 Bankruptcy Act. That is the correct act that makes up provisions how the process should go. But in case of the corporate companies or corporate entities like businesses will use what we call Coupling and Allied Matters Act. We started from 1990, undergoing a series of amendments up to 2020. Well, all of them are relevant. But the one of 2020, the current one, is the one that is more comprehensive and made more provisions. Now, we have been talking about failure, other individuals unable to pay debt, and companies. This thing does not go happen overnight. You don't just wake up, you cannot pay debt. You are owing. No. It's a build-up. So therefore, this takes us to what we call the warning signals. What are the symptoms? Are there signs? Of course, for the bankruptcy, as usual, there are signs. You should go to the framework, legal framework. Besides, let you look at the 2004 Bankruptcy Act. It made provisions for, let me just explain three of the provisions. The first signal, what you observe to show that this individual is a candidate of bankruptcy, is that the debtor is owing, is unable to pay the debt at that time. The debt is due. The creditor decides to go to court and get a judgment. And we call that judgment creditor. And the debtor did not contest, did not make any appeal or make a cross demand. And yet, he failed to honor the court order. So that is the first sign that this individual should be declared bankrupt. It all is not well with the individual. The second one would be that still has to do with court. If the property of the debtor is in an action in the court, in a court action, and the property are impounded or seized by the court and kept under the custody of the court bailiff for about 41 days, and the debtor failed to bail or to retrieve by making payment and get his good property back, that is another symptom. Of course, when those tools are not there, the debtor on his own or her own decided to make a declaration to the court that, please, I need a help, or I need help. I should be declared bankrupt. Not me anyway. The debtor should be declared bankrupt. So, okay? Others could be that the debtor decide to, go under. That is, you cannot reach the debtor. Maybe it's at home, somebody is coming, tell him I'm not around. It's not reachable, and so on and so forth. These are the major signs under that. Now, for the companies, we have what we call deteriorating financial ratios. All right? That is, there are, for those in the finance world, they know what we call ratio. It's a kind of techniques to test to what extent your establishment or entities do well in various areas. This is asset, deposit base, liability, liquidity, cash flow, and so on and so forth. How quick are you able to settle your debt? How quick when you sell, you're able to collect the back. So that is what we refer to that. Now, going from there, we have to have what we call persistent fall in cash flow, declining sales and revenue. The sales revenue, maybe you used to get maybe 10 million in a day or in a week. Now you can hardly get that amount, get half of it, and it continues like that for a reasonable period. You know there's all is not well with that entity. Now, even debt and interest obligation, the company will spend it so much to service debt. Let me really ask here, this short bucket does not end with just company entity. It equally affects companies. Countries. A lot of countries are running on that, are going bankrupt. I have not said Nigeria anyway. A lot of companies are going bankrupt. Even if you read paper, you see Pakistan is having serious issue right now, okay? Anyway, like I said, I didn't say Nigeria have gone bankrupt. Now, at this point, we'll take a look at some sampled companies that failed in the past. A very fine one is Intercontinental Bank in 2009. So this bank was faced with severe financial difficulties due to poor management and risky lending practices. and was eventually acquired by Access Bank in a bid to stabilize its operation and protect depositors' funds. We have Oando 2017, She Limited, that was acquired by Coca-Cola, and so forth. Of course, Kaba is probably there. Now, despite the numerous reported cases of bankruptcy, of corporate failure, that is the one that has to do with the company now, there are a lot of reported cases. I was shocked when I was preparing this that I couldn't even have one or come across one that has to do with bankruptcy in Nigeria. I will collect some lawyers. So I will now first of all do a research on that. And of course, the work is being published right now by the University of Benin Management Science Review. Now, we observe that in that work, now what I'm trying to say is that they are not documented. You told me they are there, but they are not documented cases of bankruptcy. I don't know whether we are so scared of going to report yourself that you cannot help yourself, you should declare bankrupt. Or maybe you so like ourselves that somebody is owing you, instead of throwing it that way to help the person, you will not do it. And yet we are complaining that all is not well. And which means all is well with us. All right? So in that 104, OMOYE investigated the reason for paucity of documented case of bankruptcy in Nigeria, specifically examining the influence of the accountant, social culture, and religion on bankruptcy pressure in Nigeria. Those three variables. The issue of accountant was proven to be not significant. Of course, the accountant is always calling. The area the accountant is significant, is relevant when it comes to bankruptcy issue, is to prepare the books to reflect what it should reflect, okay? But issue of the accountant having bankruptcy to be declared, no. It's not significant there. But now observe with a shock that social culture is a major factor. That's why people don't declare don't go for bankruptcy proceedings. It's a serious problem. Social culture. What are we saying about social culture? That is, the culture will not permit it. Oh, if I do this, it's not a taboo. My children, what happens to my children? They refer to them as children of what? Debtor. They have a father that could not pay, they took him to court. Those. And again, even you, as a creditor, you have sympathy. Say, it's my townsman. He will pay later. If I do, it's going to be a disgrace. It will affect status. That is the aspect of social culture. Now, what about religion? What I observed there, based on the question we have ministered, was that well, it's okay. Since he cannot pay, maybe that is how God wants it. God's time is the best. Let's leave it for God. When one way closes, another way we open. So God is the author and finisher of my life. So these are the issues that people don't pursue it. You can see the religious aspect focuses on forgiveness and the belief that all is well. Let's leave it for God and let the will of God prevail. That was a major factor. However, we go further. We discover that casual empiricism suggests that a significant portion of Nigerian economy operates in the informal sector, where some business are not even formally what? Registered. So how can you be talking about this when the business is not formally registered? Similarly, business individual might seek informal solution. We are saying that bankruptcy and that is not the first solution. You may try to do it another way around and getting your money recovered, what the debtors recovered, or getting it paid. Okay? Now, we have said much about the bankruptcy and liquidation. What are the consequences? Are there any? Are there troubles that will emanate as a result of what? Bankruptcy or liquidation, corporate failure? Of course, there are. Some of those I have here involved include what? Job losses. Imagine when some banks folded up that time. The people are thrown out from the labor market. They are thrown to the labor market. Started labor again. You know the impact that will have on the persons, the staff, their family, especially their wives. You know the impact it will have on their children and society at large. We have reduction in tax revenue to government. People that are working are going to pay tax. If few people are working, that means less money coming to government coffers. If that happens, then we have less revenue to fund the university and other like responsibility of the government. And we have asset devaluation, increased poverty and inequalities. innovative stiffly. You cannot innovate when you don't have a job. You cannot innovate. Of course, likelihood of increasing vices, especially among the youth. Now, there are some latest studies or past studies I've carried out in this area. For example, the one I last gave to you, one of 2024, where we try to look at the role of accountants, religion, and social-cultural. The outcome of that, I said before, revealed that accountants' role in bankruptcy declaration is not significant. But however, religion and what? Social-cultural are major what? Factor. Of course, look at the study of creative accounting and corporate failure. What is creative accounting? Well, accountants are supposed to prepare an account to reflect the fundamentals of that entity. Now, when you pick a report, statement of account, and you look at it, assuming profit now, that profit actually represents the profit. With that mindset, you're able to now make a decision, proper decision. But whereby accountant prepare the report, you use some techniques in such a way that probably you are seeing good profit, but does not actually tell more about the fundamentals, the real financial situation. So there's going to be a problem, all right? So we look at that and say that it's a problem. So we should try to avoid it, especially for the accountants, all right? Now, we look at cash flow and corporate liquidations. Liquidation prediction among non-financial firms in Nigeria. That was done by myself, OMOYE, and Wisi Ushirim, as well as Anieto in 2021. On the overall, the result implies that cash flow model performs well in predicting. We are talking about flow of cash in the system. But I said that one can help to predict to a large extent. It's a better predictor of a company that may likely have issues. So, the last one I'm going to take here has to do with ratio and false financial statement detection. Like I've explained much on that ratio. That ratio can actually suggest, when you compute relevant ratio, like leverage ratio is to look at to what extent will the asset, if all the assets is put together and sold, how many, the ones that can cover the liability? Or you can look at that one, the asset, apart from the cash now, to what extent, all right? To what extent can the company respond in terms of having the liquid, that is the cash, to be able to meet obligations? All these are different ratios that can be computed, and it can make some revelation that, look, all may not be where with such a business entity. We can talk about measures, you know, that is maybe two or more companies coming together to become one, so that they operate together. That will be like when that happens, they're able to reduce costs and do business better. All right, take advantage of the market share. They will not share. They're able to withstand better competitors. So it's not that it is good to merge. When that we should be encouraged, that it will help in this regard. Now, is it possible for this to be prevented? We are talking about bankruptcy or business failure and business failure. Of course, it is, if good practices are put in place. Hence, we came up with these factors or these points. The first, we have that strengthening corporate governance frameworks, including compliance with national and international corporate governance standards as it applied to a specific firm. It will help to avert this. Implementing strict internal control measure, it will help. Like every organization has a procedure, especially when I have to do it money. For example, we don't understand. At times they will blame the boss, say it's very stingy. For example, when salaries are delayed, is it not the accountant you say, accountant, very wicked man, they didn't pay salary on time. When you are giving promotion and the arrears are not paid, the first suspect is who? The accountant. Don't know the accountant is trying to observe the due process. You say it's the accountant. When he has to go on tour, and if the accountant decides to advise prevention the VC, we don't have money, they will say accountant is wicked, has come again. All right, and so on and so forth. If, for example, the chief executive officer decides to take some cash quick, and it's against the time control measure that no, before you take cash, you have to fill a form, and then you do something, you sign it, and the cashier, even the government cashier will just say, no, sorry, sir, we can't honor this. He's doing the right thing, but it will fire for disobeying. All right, so that's what we are saying. And they have to be transparency, and we have to be proper ethical conduct. Ethical practices have to be well enshrined, all right, and so on and so forth. Of course, diversification of revenue base, especially for individuals. Don't say like, those are you lecturers or working for government. Decided they're not going to take you home. Instead of lamenting and trying to rewrite the book of lamentations, you diversify your income stream. The other things you can go into legally to earn some extra income to augment without jeopardizing your research and scholarship. Now, the issue is this. What is not the role of accountant in this? We are saying accountant does this, check this. Okay, this company that probably become that failed. We have accountants, is that not? How come with the accountants, the company still have problems? Some of them will company collapse and fail. Why? What is the issue? Before we can deal with that, answer that question properly, let us look at the role of accountant first in preventing corporate failure. What are the roles? Now, thank you. The accountant role are evidenced in the prevention of in the prevention, management, and remediation of corporate failure. These roles are not restricted to financial record keeping, financial reporting, budgeting and forecast, financial analysis, internal control, regulatory compliance, and others. However, when corporate failure becomes inevitable, that the accountant has done everything possible and it's not, the company still continue to go back, the accountant will not trust it to be what? A crisis manager. At that point, accountant will now do what? Will now have to guide the company in how to respond to what is our grant, okay? The accountant could dive into the wreckage of the company finances or COVID. Instead of fraud, it could be fraud, probably fraud. So we have to go beyond this role to do all this stuff. For the affirmation responsibility of accountant lies the ultimate question. Should the accountant be blamed, therefore, for corporate failure? That is the question. Specifically, if an accountant is complicit in fraudulent activities or displayed negligence, such as manipulating financial data, not doing his job with due diligence and integrity, of course, he should be liable. There's a case report now that happened in January here in China. In fact, accounting firm PWC was sanctioned because the report they gave on a company, Evergrade's company, is a real estate company in China. So even the PWC admitted they've not done well. They will have to find them that they have to be out of any job. They will not provide any job in China for 6 months, and they are going to return the revenue they earn from that operations. But if this is not the portion of the account, of course, we may not just blame the accountant. Again, because of the fact that there are some information that accountant will not privy to, it is the chief executive officer under the management team that are in charge of the final decision making. The accountant can always advise. Okay? At this point, a balanced view stipulates that while accountants have a significant role in ensuring financial integrity and transparency, the responsibility for corporate failure often rests with multiple parties, including senior management, the board of directors, and other external conditions. Though I have conducted several studies in this area of knowledge, it is equally crucial to welcome further research on this subject of what discourse. It's at this point, and based on the totality of the lecture I've delivered so far, that I compare to make the following recommendations. They are as follows. Emphasis should be placed on rigorous financial oversight, regular risk assessment, training on financial best practices, and proactive strategies. It is pertinent to incorporate early warning system or signals to detect financial distress. Accountants should exhibit objectivity within the ambit of their regulations. Regulatory authority is very important at this point. Should adopt sound global and local policies that regulate business to be profitable and sustainable. Also, the Bankruptcy Act should be reformed to reduce potential complexity, reflecting both social, cultural, and religious views in Nigeria. Having individual goodwill, that is for individuals. Individual goodwill is maintaining a sustainable lifestyle and avoiding unhealthy social bandwagon may prevent or mitigate bankruptcy. You are individual, you know your capability. Don't say my neighbor took his or has his children his own daycare. You decide to take your children there. Some of us attended the school in the village, but we are here where we are today by the grace of God. So you know what your capabilities are. So you have to adapt that. Now, the accountancy professional bodies should improve on oversight functions of members to ensure clear adherence to professionalism at all times. At all times. Therefore, Madam Vice Chancellor, most precious Almighty God, everlasting King of glory, whose grace is boundless, I give you all the praise. I say thank the Vice Chancellor, Professor Lilian Omotia Salami, and the ST Principal Officers of the University for trusting me with this significant responsibility. My beloved parents, Mr. SULE Pius OMOYE of blessed memory, and Mrs. Osuro Elizabeth OMOYE, I remain thankful to you forever for nurturing me with love, care, and discipline. To my wife and children, you are simply the best thing that will ever happen to me in every dimension. I say thank you to my uncles, aunties, and every other family member, special thanks to my in-laws and close family friends, Chief Ayela Wagwe of blessed memory, the Adeyomba of Benin Kingdom, and family. And of course, his first son, I call it Epa Deba, is here right now. I greet you. I would like to especially thank Alhaja Abdul Hamid Baba Sayu, aka Baba Petro, and family, Mr. Wisi Oshilin, and family, Professor J. Hirobo, former DVC admin, and my daddy of daddies. I thank you. Professor Hassan Oekena, who to be my teacher and my mentor, Professor Obi Osadolo, Professor Moluyi Dean, Faculty of Law, Professor Jeragbe, Professor Sagede, Professor Sewekai, Professor George, Professor Boriyi Osunde, Professor Ore, Professor Ibudalo, Professor Edo Odegbuna, Professor Zeko. It is time to say thank you to all my colleagues in the Faculty of Management Sciences for the good times we shared over the years, starting from the Emeritus Professor himself, and he's here right now, Professor B.E. Osaze, Pioneer Dean of the Faculty of Management Science. Professor Chief A.O. Enofe, the current Dean of the Faculty. I'm very grateful to my able head of the department, Dr. O. Barati, who happened to be my students, and to all my colleagues in the Department of Accounting, too numerous to mention. To my professional bodies, the Institute of Chartered Accountants of Nigeria, ICAN. Thank you for giving me the platform to render professional services and inculcating in me the confidence of ICAN, because the ICAN in an accountant makes the difference. I'm equally grateful to the Chartered Institute of Taxation of Nigeria, CITN, for advancing the frontier of taxation practices in Nigeria and beyond. I thank you tremendously. God bless.
Clap, 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 clap. You will implicit, you will agree with me that this has been a wonderful, wonderful lecture. And you will also agree with me that Professor Omoye is truly an expert in that field, because even when technology almost did not cooperate with him, he stood his ground and he marshaled out his points pointedly. Please put your hands together again. And then, number 3, Professor Omoye's lecture has further strengthened our overdue process bossa, so that when he says you cannot do it like this, even when the VC has approved, Professor Omoye has just strengthened him to stand on his decision. Please put your hands together again. May I now respectfully invite Madam Vice Chancellor to recap the lecture.
Thank you very much. Thank you. The bits that I need to say here is when Prof was delivering and he said accountants, we tend to say they are selfish. I was very happy about that, really. The bit I didn't like when he said, assuming the CEO wants money without protocol. And I said, no, don't say that. I didn't like that bit. But anyway, thank you very much for a well-delivered lecture. Distinguished ladies and gentlemen, let me try to recap, and I'm happy that he didn't use all the zim, so that I'm sure we all got the gist of the lecture. So the lecturer gave an insightful explanation of the two complex, interconnected phenomena that pose significant threats to the health and sustainability of individuals and businesses, that is, bankruptcy and corporate failure, by shedding light on their causes, consequences, and most importantly, mitigating strategies. The lecturer started by defining key words, bankruptcy and corporate failure, elucidating clearly how they are distinct yet related. Understanding these definitions were crucial for grasping the core themes of the lecture. He explained that common causes of corporate failure are poor management practices, financial misjudgment, and inadequate strategic planning. Others include economic downturns, market disruption, and changes in regulatory environment. This can quickly put businesses on the brink of collapse. The lecturer emphasized some important measures that can be put in place to avert this, such as robust financial controls, effective cash flow management, comprehensive business planning, as well as being abreast with current financial information. These can actually help avert bankruptcy and corporate failure. The lecturer then concluded by advising that business leaders, policymakers, and stakeholders be adequately equipped with the knowledge and tools necessary for fostering resilience, promote sustainability, and safeguard against the risks of insolvency, which of course is the inability to meet one's debt obligation. Distinguished ladies and gentlemen, thank you for attending and for listening.
Thank you, Madam Vice Chancellor. Please put your hands together again for the Vice Chancellor. We now invite the immediate family members of the lecturer. Please step up stage as the Vice Chancellor decorates the lecturer. Family members, please come up stage. As they do that, please join me to welcome heartily the wife, Mrs. Efosa Omoye. Welcome. We welcome his brothers, Simeon and Nicholas Omoye. Welcome. We welcome the sister, Rose Omoye, and all family members present. We welcome heartily the representative of the president of ICANN, as the lecturer has said, Chief Dr. Oye Akisulire, We welcome the Majority Leader, Edo State House of Assembly, Honorable Charity Aigwobawenia. We welcome the Chairman of ICANN, Benin and District Society, Deacon Emmanuel Olatunde. We also welcome Professor Emeritus Bob Osaze. Put your hands together, encourage them as we introduce them. We welcome the former acting VC AAU Ekpoma, Professor Bishop Benson Osadolo. We welcome the former DVC Administration of Uniben, Professor Jacob Ehiorabo. We welcome immediate past bursar of the university, Dr. Victor Imagbe. Put your hands together. We welcome Director Academic Planning, Professor Venerable Ifweo Osawoyi. We welcome Director Uniben Consult, Professor Ofuan Ilaboya. We welcome the Uniben Orator, Professor Mike Omoyed Barale. We welcome the Director Alumni Relations, Dr. Stephen Obeki. Put your hands together. We welcome Professor Prince Famous Izadole. This stage is getting too crowded, please. We invited only the immediate family members. Please. You will have opportunities to take pictures outside. Please. We welcome Professor Ehi Osayomo. Are we talking to people, please? Unless you comply, I will not go on. Please leave the stage. We welcome Professor Yeson Dabo. We welcome Professor Chinumba Okafor. We welcome Professor Godwin Atedo. We welcome Professor Adobame. Welcome also Professor Medina Kadiri. Put your hands together for Deacon Olatunde Emmanuel, Chairman, ICANN, Benin and District Society. We welcome Alhaji Ao Olaowo. We welcome, he is the past chairman of ICANN. Welcome Prince Efedome, excellent. We welcome Kingsley Nobakai. We welcome Dr. Dominic Eche. We welcome Kilian Ogedu. We welcome all members of the accounting class of 2000, all members of the Chartered Institute of Taxation of Nigeria, and all members of ICANN. With the kind permission of Madam Vice Chancellor, we will now round off the 326th inaugural lecture of the University. Please rise for the Uniben anthem, followed by the third stanza of the national anthem. Remain standing for the Vice Chancellor's procession to leave the auditorium. Thank you once again for coming.
Thank you.